5 corporate actions and its impact on stock prices. Corporate actions are initiatives taken up by a corporate entity that brings in a change to its stock. There are many types of corporate actions that an entity can choose to initiate. A good understanding of these corporate actions give a clear picture of the company's financial health and also to determine whether to buy or sell a particular stock. A corporate action is initiated by the board of directors and approved by the company's shareholders. Dividends. Dividends are paid by the company to its shareholders. Dividends are paid to distribute the profits made by the company during the year. Dividends are paid on a per share basis. For example, during the financial year 2012-13, Infosys had declared a dividend of Rs 42 per share. The dividend paid is also expressed as percentage of the face value. In the above case, the face value of Infosys was Rs 5 and the dividend paid was Rs 42. Hence, the dividend payout is said to be at 40%. It is not mandatory to pay out the dividends every year. If the company feels that instead of paying dividends to shareholders, they are better off utilizing the same cash to fund a new project for a better future. Besides, the dividends need not to be paid from the profits alone. If the company has made a loss during the year but it does not hold a healthy cash reserves, then the company can still pay dividends from its cash reserves. Sometimes, distributing the dividends may be the best way forward for the company. When the growth opportunity for the company have exhausted and the company holds excess cash, it would make sense for the company to reward its shareholders, thereby repaying the trust the shareholders hold in the company. The decision to pay dividend is taken in the annual general meeting (AGM), during which the directors of the company meet. The dividends are not paid right after the announcement. This is because the shares are traded throughout the year and it would be difficult to identify who gets the dividend and who doesn't. Dividend cycle. The following timeline would help you understand the dividend cycle. Dividend declaration date. This is the date on which the AGM takes place and the company's board approves the dividend issue. X date or X dividend date. The X dividend date is normally set one business day before the record date. Only shareholders who own the shares before the X dividend date are entitled to the dividend. This is because in India, the normal settlement is on T+1 basis. So for all practical purposes, if you want to be entitled for dividend, you need to ensure you buy the shares before the X dividend date. Record date. This is the date on which the company decides to review. The shareholders register to list down all the eligible shareholders for the dividend. Usually, the time difference between the dividend declaration date and record date is at least 30 days. Dividend payout date. This is the day on which the dividends are paid out to shareholders listed in the register of the company. Cum dividend. The shares are said to be cum dividend till the ex-dividend date. When the stock goes ex-dividend, usually the stock drops to its extent of dividends paid. For example, if ITC is trading at Rs 335 has declared a dividend of Rs 5, on X date the stock price will drop to the extent of dividend paid. And as in this case, the price of ITC will drop down to Rs 330. The reason for this price drop is because the amount paid out no longer belongs to the company. Dividends can be paid anytime during the financial year. If it is paid during the financial year, it is called interim dividend. If the dividend is paid at the end of the financial year, it is called final dividend. We will see some of the recently declared dividend. Bajaj Holdings has declared interim dividend. It has declared 650% of dividend on its face value. It was announced on 12th September 2024. Ex-dividend date is 25th September 2024. Rail Vikas has declared interim dividend. It has declared 21% of dividend on face value. It was announced on 17th May 2024. Ex-dividend date is 23rd September 2024. Rashtriya Chemicals has declared interim dividend. It has declared 12% of dividend on its face value. It was announced on 17th May 2024. Ex-dividend date is 23rd September 2024. Bonus issue. A bonus issue is a stock dividend allotted by the company to reward the shareholders. The company shares are issued out of the reserves of the company. These are the free shares that the shareholders receive against shares that they currently hold. These allotments typically come in a fixed ratio such as 1:1, 2:1, 3:1, etc. If the ratio is 2:1 ratio, the existing shareholders get 2 additional shares for every 1 share they hold at no additional cost. So, if a shareholder owns 100 shares, then he will be issued an additional 200 shares. So, his total holding will become 300 shares. When the bonus shares are issued, the number of shares the shareholders holds will increase, but the overall value of investment will remain the same. Similar to the dividend issue, there is a bonus announcement date, ex-bonus date, and record date. Companies issue bonus shares to encourage retail participation, especially when the price per share of a company is very high and it becomes tough for new investors to buy shares. By issuing bonus shares, the number of outstanding shares increases, but the value of each share reduces. We will see some recently declared bonus issues. Mindtech has declared bonus. Bonus ratio is 1:4. It was announced on 8 August 2024. Ex-bonus date is 20th September 2024. Acceleratabs has declared bonus. Bonus ratio is 3:5. It was announced on 26 July 2024. Ex-bonus date is 10th September 2024. CDSL has declared bonus. Bonus ratio is 1:1. It was announced on 2nd July 2024. Ex-bonus date is 23rd August 2024. Stock split. When a stock split is declared by the company, the number of shares held increases, but the investment value or market capitalization remains the same, similar to bonus issue. The stock is split with reference to the face value. Suppose the stock's face value is Rs 10, then there is a 1:1 stock split, then the face value will change to Rs 5. If you owned 1 share before split, you would now own 2 shares after the split. Similar to bonus issue, stock split is usually to encourage more retail participation by reducing the value per share. Now we will see some of the recently declared stock splits. Swastika Invest has declared split. Old face value was 10, new face value is 2. Split date is 25th September 2024. One Source Ideas has declared split. Old face value was 10, new face value is 1. Split date is 13 September 2024. Sapphire Foods has declared split. Old face value was 10 and new face value is 1. Split date is 5th September 2024. Rights issue. The idea behind a rights issue is to raise fresh capital. However, instead of going public, the company approaches their existing shareholders to think about the rights issue as a second IPO, but for a selected group of people, that is, existing shareholders. The rights issue could be an indication of promising new development in the company. The shareholders can subscribe to the rights issue in the proportion of their shareholding. For example, 1:4 rights issue means for every 4 shares a shareholder owns, he can subscribe to 1 additional share. Needless to say, the new share under the rights issue will be issued at a lower price than the what prevails in the markets. However, a word of caution, the investor should not be swayed by the discount offered by the company, but they should look beyond that. Rights issue is different from bonus issue, as one is paying money to acquire shares. Hence, the shareholder should subscribe only if he or she is completely convinced about the future of the company. Also, If the market price is below the subscription price or right issue price, it is obviously cheaper to buy it from the open market. Now we will see recently declared rights issues. Rapid Investment has declared right issue. Rights ratio is 25:39. It was announced on 24th April 2024. Ex-right date is 17 September 2024. Advik Capital has declared right issues. Right ratio is 14:30. It was announced on 23rd March 2024. Ex-rights date is 12 September 2024. Shrivari Spices has declared rights issue. Rights ratio is 1:5. It was announced on 17th April 2024. Ex-rights date is 4th September 2024. Buyback of shares. A buyback can be seen as a method for a company to invest in itself by buying shares from other investors in the market. Buybacks reduce the number of shares outstanding in the market. However, buyback of shares is an important method of corporate restructuring. There could be many reasons why corporates choose to buy back shares. Improve the profitability on a per share basis, to consolidate their stake in the company, to prevent other companies from taking over, to show the confidence of the promoters about their company, to support the sharp price declining in the market. When a company announces a buyback, it signals the company's confidence about itself. Hence, this is usually a positive for the share price. We will see some of the recently declared buyback of shares. Jai Corp has declared buyback of shares. Ex-date is 10 September 2024. End date is 20th September 2024. Aarti Drugs has declared buyback of shares. Ex-date is 5th September 2024. End date is 19th September 2024. Indian Toners has declared buyback of shares. Ex-date is 30th August 2024. End date is 11th September 2024.